Hello, everyone. Welcome to our first episode of Phillip Trading Podcast in 2022. My name is Liao, and I hope everyone had a great holiday. Today, we have Trent with us. He's a senior dealer from Phillip Futures. How are you doing, Trent?
Yeah, I'm feeling good today. Great to be back for the first year of 2022.
Okay, good to hear that. Yes, so our topic for today is, will the strong Santa rally bring more prosperity to US stocks indexes in 2022? As we all know, Santa Claus rally is off to best start in 20 years with the S&P 500 index ended at record high as strong US retail sales underscore economic strength and ease worries over Omicron. So Trent, can you explain what is it meant by Santa Claus rally?
Okay, sure. Yeah, so actually the Santa Claus rally describes a sustained increase in the stock market that occurs in the last week of December through the first two trading days in January. So there are actually numerous explanations for the causes of Santa Claus rally, including tax considerations, a general feeling of optimism and happiness on Wall Street, and the investing of holiday bonuses by all those executives. Another theory is that some very large institutional investors, a number of which are more sophisticated and more pessimistic, tend to go on vacation at this time. So leaving the market to retail investors who tend to be more bullish. According to the 2016 edition of the Stocks Traders Almanac, since 1969, the Santa Claus rally has yielded positive returns in 34 of the past 45 holiday seasons. The last 5 trading days of the year and the first 2 trading days after New Year's. The average cumulative return over these days is 1.4%, and the returns are positive in each of the 7 days of the rally on average.
Okay, sounds interesting. Thanks for the explanation on Santa Claus rally. Now, next, can you illustrate or recall the performance of S&P 500 in 2021?
Okay, so in the year marked by waning pandemic, new COVID variants, supply chain disruptions, and a fit and start US economy recovery, the S&P 500 matched all records and rose to a 26% gain and the creation of 8.6 trillion in value. So the benchmark steady much higher has helped push it to a fresh record high 68 times this year, the second most ever topped only by 1995. Put another way, the S&P managed to close a record high on nearly 30% of all trading days in 2021. I would like to highlight a few interesting events that happened in 2021. One of them is the mini mania. So flush with cash and trapped at home due to the pandemic, retail traders started the year by supercharging the so-called mini stocks. So counters such as GameStop Corporation, AMC Entertainment Holdings were emblematic of the movement as investors flooded social media platforms with calls to buy shares of the struggling companies. So AMC Entertainment has skyrocketed more than 1,200%, and GameStop rally about 700%. Another interesting event that also happened in 2021 is the IPO record. So the explosion of special purpose acquisition company, SPAC, these things that help drive IPO on US exchanges to a record. Nearly 1,110 firms make their trading debuts in 2021, raising roughly about $337 billion. Electric pickup maker Rivian Automotive Inc. led the way, raising $13.7 billion in November in what was the 12th biggest IPO of all time across all exchanges. The data were confirmed by Bloomberg Show. South Korean e-commerce giant Coupang Inc. came in second with its 4.6 billion listing in March. So overall, it's a quite interesting 2021 that we have experienced so far.
Okay, thanks for, yes, indeed, it has been a fascinating year to the S&P 500 in 2021, and a lot were going on. Okay, so looking ahead, what are the challenges or risks ahead to the market in 2022?
So the S&P 500 has climbed 26% so far in 2021, after rising about 16% in 2020. So rip-roaring corporate profits and easy monetary policy have fueled the run. Earning growth is expected to moderate next year, and the Federal Reserve is pursuing plans to raise interest rates, chipping away at key support for the stocks market's rally. When rates are low, investors tend to load up on risk assets such as stocks to generate returns. Then when inflation accelerates and policymakers raise interest rates, the value of companies' futures earning drops and investors have more alternatives for places to make money. We expect the rock bottom interest rate early in 2020 helped propel equity valuation higher, and they have remained elevated in the months since. So many analysts and investors now believe that the increasing rates are likely to keep valuation from rising further and might cause them to fall. And also many of the structures that have supported the market will fade next year. Gains in 2020 and 2021 have been propped up by government spending and central bank interventions, really near zero interest rates. And also this month, the Fed laid the groundwork for interest rate increases starting as early as next spring and approved plans to wind down a bond buying stimulus program more quickly. In addition, the Democrats roughly $2 trillion education, healthcare, and climate package faces an uncertain future after Senator Joe Manchin said last week he would oppose it. So most of the Wall Street strategies are forecasting smaller gains for the S&P 500 in 2022. Among 13 banks and financial services firms whose analysis has published 2022 forecast, the average target for the S&P 500 to end next year is 4,940, about 4.5% above where the index closed last Thursday. So things are not looking good for the S&P 500 in 2022 overall.
Okay, thanks for the heads up on these challenges ahead in 2022. So moving ahead, how should investors take opportunities in the S&P 500, and what should investors look out for in 2022?
So given the strong showing in 2021, investors may be wondering what lies ahead for the S&P 500. While investors should always be thinking long term, it's good to know where the market stands and have a sense of what to expect. It's never too late to buy when you are a long-term investor, but let's take a look at where the S&P 500 might be heading. As we head into 2022, there are some key themes to watch, starting with inflation. The CPI, Consumer Price Index, jumped 6.8% in November, the highest increase in 39 years. That is the 9th straight month it has stayed above the Federal Reserve target of 2% inflation. Federal Reserve expects inflation to fall around 2.2% in 2022, which also is above the target, but significantly less than the anticipated 4.2% for 2021. This will have an impact on the stock market, but not across the board. Certain sectors like financials, energy, real estate, utilities, and healthcare tend to do well in inflationary environments, while technology, consumer goods, and consumer discretionary, among others, won't do as well. Then the other big factors in 2022 is the infrastructure bill and the pending Build Back Better Act, which could invest almost $3 trillion into the economy over an extended period. An analysis by Moody's Analytics said concerns this initiative will lead to undesirably high inflation and also an overheating economy are overdone. However, in the longer term, many economists say the investment will increase productivity and growth, which would reduce inflation. As for the impact on the markets, the massive investment will certainly benefit wide swaths of the economy, including transportation, construction, IT infrastructure, energy, manufacturing, and others. But don't expect to see this investment to start to kick in until the second half of 2022 and beyond.
Okay, all right. Thank you, Trent, for the wonderful sharing. And I hope our audience out there take note on those events in 2022. Now we have come to an end of our podcast, and I hope everyone feel excited about the market in the new year. And once again, thank you, Trent, for the sharing today. Have a great year ahead in 2022 and see you next round. Goodbye.
Yeah, happy New Year to everyone. Bye.